You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 19th of March, 2018. As we end the week, we see all of our indexes down. We will first jump into gold, and when I say down, I mean just down for the day on Friday. As we jump in, we can see that the S&P 500 actually had, as far as the candlestick goes, an up week. What's interesting, though, is our main indicator, price percent oscillator, is still headed down. In fact, it had been heading up the prior week, moved over down this week. We see the derivative oscillator still quite negative. Price movement, again, up for the week as far as our candlesticks go. But again, pay close attention to the price percent oscillator heading down. We don't have a trade in the SPY. Why? Because the two-day chart is still up, but it appears to be getting close to crossing over, going down. Just the first day of the latest two-day candle, it is a red down candle, having been preceded by a red spinning top, which of course means indecision, tending down, breached the two-day trend line. So we'll continue to watch. We may have some trades open themselves up if the week starts off decidedly down. 4-hour chart, of course, shows you even more of that. We've got 7 candles. And what do we see going on? Well, they're all red down candles, except for one where we saw the crossover occur going down on the 4-hour chart. So keep your eyes open this next week for possible short trade on the S&P 500. We'll just wait and see. Now, let's move on to the next chart. That is the Qs, the Nasdaq 100, down for the day 0.30%. Remember, we had a weekly vertical crossover at the end of the week on Friday, the 9th of March, and we see a big green up candle as far as our Heikin Ashi candlesticks go. Don't see as positive signs from our price percent oscillator. It is still moving up, but has not crossed over the red signal line, but not anything strong. Derivative oscillator is still negative. So we'll continue to keep our eyes on the Qs. What do we see going on the two-day chart? Well, sort of stalled after it peaked out. We had 3 nice up candles, and of course we had 1 nice up candle on the two-day chart after. That was on Monday and Tuesday, after the weekly vertical crossover on that prior Friday this last week. Then we followed by 3 days of sideways sliding down movement. Again, price percent oscillator is still positive, and the derivative oscillator is still positive. I would just say weak. So we'll continue to keep an eye on things as we move into the next week. Biggest and nicest thing is that, again, we still have everything positive for us. So again, keep your eye on the Qs. Next, we go to 20-year bonds. We see that they were down for the day also 0.36%. However, this last week has a green up candle, a little bit of a wick on the bottom, nice big long wick, maybe twice the size of the candle itself on top. Derivative oscillators losing downward momentum. Price percent oscillator moving up but has not crossed yet. We keep talking about possibly having a bottom here on bonds, which of course as bonds start moving up decisively, that typically means the stock market. It shows weakness in the stock market, money flowing from stocks into bonds. As we look at the two-day chart, we see that we do have price movement above the two-day chart. It is positive. Again, don't have the weekly crossing over yet. Bonds had slid sideways for 6 days on that two-day chart, up for 4 days, and then this first day of the latest chart is a red open box candle, again showing some weakness, but the derivative oscillator's gaining energy. Price percent oscillator not going up at the same strong sentiment that it had, but again, still moving up quite nicely. So we'll continue to keep our eye on the price percent oscillator on all of these charts, and we'll see just where things develop over the course of this next week on TLT, the 20-year bonds. Oh, and I'm sorry, I don't think I jumped into the 4-hour chart there. That 4-hour chart, we saw things peak out on the 15th and then sort of start rolling over, heading down. So again, keep our eye on what's going on over the course of this next week on the 20-year bonds. And again, if they do bottom out and keep moving up, might mean that the market, well, it is showing you the market's significantly weakening. If that indeed occurs, hasn't happened yet, but there's some signs there. What do we see on gold? Well, we have a weekly vertical crossover on gold going down. Down for the day, 0.24%, a red down candle. Of course, price percent oscillator down, and the derivative oscillator is down strongly. So we do have a confirmed weakness in gold. And again, look for jumping into gold on Monday. If around 10:30 after idiot hour is over, or at noon if you want to stick with the 4-hour chart, look and see if the markets are pulling back in gold. It might give you a jumping in point. We see that we have now 3.5 two-day down candles. Latest down candle for the first day of the latest two-day candle down decidedly. Price percent oscillator is crooked over going down. Derivative oscillator gained a little bit of downward momentum on this first day of the latest two-day candle. As we look at the 4-hour chart, what do we see? We see that we have 2 days of strong down movement in gold. Price percent oscillator is moving down. Derivative oscillator moving down decisively also. So again, look for how the markets start up on Monday, and if indeed you've got a jumping in point on a down move on gold on Monday. Folks, that's where we are as we end the week. We hope that you will take all the trainings that you can at our website over the weekend. Also, a lot of great trainings at our YouTube channel. Please go there and subscribe. Same at our Facebook. We post all of this information everywhere. We do it all for you. If you're not already a subscriber, you need to be one, because you would have gotten Chapter 8 of our latest book absolutely free. We'll probably put that once again before we put it up for the public sometime in the future. Love to hear from you. CW@chartingwealth is how to write us. Thank you for your patience as we have been traveling. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.